Just to welcome you all here. So thanks for joining us at our First Empower event. We're really pleased to have you along here today. I'm just going to take a moment just to introduce our speakers to you and talk you through how the event will work. So we're joined here today by my colleague Ash. She's just going to give us a talk through all the latest details of what's been happening in the market, some of the latest facts and figures. And then we'll move on to answering the questions, the pre-submitted questions that you've all sent in beforehand. Craig Foster from one of our member firms, McDougall McQueen, and David Lauder from ESPC Mortgages are on hand to answer all of those questions that you've been sending in. If you have any other questions that appear, just pop them in the Q&A section and we will try and get to as many of them as we can at the end. We have to admit it's been a very popular event. We've had a lot of questions pre-submitted, so we'll try and cover as much as we possibly can over the next sort of 40-45 minutes. But if there's anything that you need to cover off afterwards, just drop me an email and we will cover that off separately. We can put you in touch afterwards. So yeah, we know that things can be really daunting when you're buying your first home, but we're all here just to try and make it as simple as possible. So without further ado, I'll pass you over to Ash.
Thank you so much, Leanne, and hi everyone. Thanks for joining us today. As Leanne said, I'm just going to give you a brief market update from the last 3 months. So we're going to cover off from February through to April, and that's going to cover the areas of Edinburgh, the Lothians, Fife, and also the Borders. So I think first of all, if we take a look back to the same time frame last year, the pandemic had basically just hit at the end of March and we found ourselves in a subsequent lockdown restrictions. So yeah, it had a significant impact on the Scottish property market. We saw little to no activity. So when we have a look at this time, so fast forward a year, there's light at the end of the tunnel, thankfully. I'm sure everyone feels the same. This year really paints a completely different story. The last quarter has been extremely busy. I'm sure that Craig and David would definitely testify to that one as well. And we have seen high levels of activity from both buyers and sellers in the market. The amount of homes being sold have actually increased by 128% year on year. So it just kind of shows you that drastic difference from the same time last year as well. So we're also seeing a strong increase in actual homes coming to the market. So this is homes being listed and actually coming on for Edinburgh, the Lothians, Fife and the Borders compared to the same time last year. So what we're seeing here is an indication of seller confidence, which is great. And this is up 71% year on year as well. When we have a look at the average selling price, again, it's for the exact same areas. We notice a rise of 8.9%. And if you kind of focus that into Edinburgh, the Edinburgh current average selling price for those 3 months was £241,000. And that is obviously up that 8% as well year on year. It's very different for a lot of different areas. And again, a lot of different property types are so different. But this is just the average that we're seeing in homes listed through ESPC. So when we're also having a look at how much homes are going over the home report, we can let you know that for that 3 month period, it was sitting at 102.4%. So that's slightly down on the same time frame from last year. It was sitting at about 102.7%. Again, this is generalized and it is covering all those different areas. So we can break down information further if you need any more help on that. When we're looking at time to sell, the time to sell for the last quarter for Edinburgh, Lothians, Fife and the Borders was sitting at 25 days. So properties are still selling extremely quickly. And if we actually break that down to look at Edinburgh specifically, that's sitting at 28 days. So it's a little bit slower there. But I think in the whole, what we can report is strong buyer and seller demand. And I think we anticipate that interest remaining really strong over the next 2 months as we see the lockdown kind of restrictions easing a little bit more, and we anticipate the new normal, whatever that might mean. So just to reiterate, those averages are for that whole area. They are very, very different for different properties and different area types. So I would definitely suggest that you speak to your solicitor, or you can have a look at our house price reports to get a little bit more key indicators about how different areas are performing as well. So that's just a little bit about the property market over the last quarter. We have so many questions to get through today, so I'm just going to start at the moment and just want to say thank you so much to everyone for pre-submitting all your questions. We'll just get cracking. So I'm going to talk you through them and I'll get the panel of experts to answer them for us. So The first one, Craig, this is for you. What is the process of buying a first property and what is a solicitor's role?
Oh, good one. Right. Probably the starting point in any journey, and David will probably concur with this, is get hold of a good mortgage broker. Understand your budget. We get a lot of clients that come to us but don't really understand what they can afford, and understanding that's really key, because then you can really sort of concentrate on the market or the type of area and type of property you want to buy. Once you've done that, ESPC, obviously first port of call. That's where you start to look for your houses. You can identify what you can afford. Once you've done that, usually you get in touch with a solicitor firm. I'd always advocate you do that early, because there's AML, there's compliance, there's questionnaires that need to be filled out. So getting all that done early, speaking to the firm, making sure they know you, means that if a property comes in on the market and you want to move quickly, you've got all your ducks in a row, you've spoken to your mortgage broker, you've got your solicitor on board, and you're ready to go. In terms of the role that we do, in our firm, we have specialist purchase negotiators. So that's a team that buys pretty much every day on behalf of clients. So they can give you advice, not only in relation to what type of offer you want to make, but what extras you need to look at. So generally speaking, the solicitors will advise you on price, or certainly our firm does. They then take you through the conveyancing process. They deal with your lender, so the loan papers come in, they will get that sorted on your behalf, and yeah, pretty much take you from start to finish thereafter, right through to the point that you get your keys, and then their job is thereafter to register your title in the land register and make sure that you own the property, which is ultimately the sole purpose of your journey. So yeah, that's a
Thanks so much, Craig. Yeah, so get in touch with your solicitor kind of early on in the process. Someone else has also asked about what's the cost involved in buying a property?
I mean, that differs from solicitor to solicitor in relation to solicitor's fees. I mean, you're probably seeing somewhere between £500 and £1,000 is the sort of the average, depending on what size of property you're going for, what type. First time buyers sometimes get punished, unfortunately, because if you're using the first home fund, there's a bit extra work. So many firms now will charge an additional fee for that. Some don't, but some do, because there's a lot of extra work that's required. But yeah, somewhere between 500 and 1,000 is probably the solicitor's fee. Thereafter, you've got LBTT, so anything up to 145, there's no cost. Anything above that, 250 at 2%, and well, not many first-time buyers are going above 250, and then registration dues to register your interest in land register. It's around about £400, and if you're borrowing, which many first-time buyers do, it's £80. So you can be £500 in registration dues. You've got your legal fees, and you've got your LBTT, and there's online guides to sort of help you assist with what that will be. The only difference, as I say, is if you're using the first home fund, you may have to pay an additional sum to use that because of what's extra involved. And if you're buying a new build, the new build will builders will often ask you to pay search fees, which generally the seller will pay, but on a new build, sometimes the buyer has to pay. So yeah, a couple of grand is probably the sort of, if you budget for that.
Perfect. Thanks so much, Craig. That's really helpful. Next one I've got here is step by step. What is the process of taking out a mortgage? What is taken into account before you get a mortgage, and what is the mortgage amount you're able to take out based on? David, if you want to answer that one.
Yeah, so the process of taking out a mortgage, the initial step would really be to engage obviously with a mortgage advisor, preferably an independent advisor who can then have access to all the sort of main banks and building societies. What they'll do is they'll pre-qualify the client, initially asking about what their employment status is, if they're permanent or contract or self-employed, obviously how much they earn, what fixed monthly debt commitments they have, so loans, credit cards, student loans, children, childcare commitments, things like that, and also what sort of size of deposit they have. What that helps the mortgage advisor do is get a flavour of what their potential borrowing is, which they can then present to a chosen bank to get what is basically recommended as an agreement in principle, which involves a credit score against the clients to check about eligibility. Once you've got an agreement in principle and you've got a solicitor like Craig, that's you really got your ducks in a row, so you're ready to go and offer on a house. Once you get an offer accepted on a house, it's then that you have to proceed to a full mortgage application, which in essence is where you need to evidence everything that you've told the bank in terms of passport, who you are, bank statements, how you go about your business, etc. And then you present those to your mortgage advisor, who would then submit it to the chosen mortgage lender. From when you submit a mortgage application to when it's officially accepted, you're probably looking at about a 2 to 3 week period if it's well packaged. But I think the first thing is just to get a flavour of what you can borrow, so that when you've got a solicitor and agreement in principle, you are then ready to start actively looking at houses.
Perfect. Thanks so much, David. Next one is, can a solicitor based in Edinburgh work for a customer who is looking to buy a property in Fife? That's one for you, Craig.
Yeah, well, short answer, yes, they can. I mean, the process of buying a house, as I said before, it's kind of divided into two parts. You've got the missus, which what we call missus, it's the contract side, and then you've got conveyancing, which is the title side. And there's nothing unusual, no matter where you buy in Scotland. On the title side, they're all the same, roughly, you know. But whilst I would say that we could buy, I would generally point my clients to a local solicitor. That's just the way we work. We think that, particularly in relation to giving advice on price and some of the sort of local issues that arise, generally speaking, if you're certainly not got an established solicitor, you're better to go to the local solicitor where you're buying, because they'll give you, they'll be far clearer on what the market's doing at that precise time. So that's what we'd be doing.
Perfect. Thanks, Craig. And I've got another one. You're popular today. What would happen if a customer is interested in 2 properties at the same time? Can the customer / buyer make an offer on both properties at the same time? And what would happen if both those offers were accepted?
Yes, you can do that. There's no legal impediment or rules that stop you offering for the same property. If they're both accepted at the same time, well, unless you've got deep pockets, or David can get you 2 mortgages, and choice. And what we would be saying to our clients is, you need to let the disappointed seller know ASAP. And by ASAP, I would say that day, by close of business. So yeah, you can offer. It occasionally happens. It's very unusual, but it's occasionally you've got 2 closing dates that are running at the same time, and you know, yeah. But yeah, as long as you tell them by the close of play what one you're going with, then that's generally fine.
Perfect, thank you. And once an offer has been accepted, whether with conditions or not, can the buyer pull out at any point for whichever reason without incurring legal issues or any financial penalties?
Again, yes. That's short answer. As long as missives are not concluded, you can pull out at any time. There's no legal cost to you. The solicitor might charge you a fee for aborting a purchase, but yeah, you're not contractually bound to pay anything. It's really important when you're buying and selling that you understand when missives are concluded, because that means you're contractually bound. And of course, if you pull out after missives are concluded, it's a significant cost potentially. You could be paying the sellers losses, extra costs. If they only get, say, £10,000 less than what they were selling to you, you've got to meet that shortfall. So there's a big distinction at that point. Yeah,
that's great. Thanks so much, Craig. Another one for you, David. We've got, how does a deposit work and how much deposit should I expect to pay?
A deposit basically is the commitment that the banks ask you to bring to the table on top of the mortgage, so it piggybacks onto the mortgage. Minimum deposits at the moment is 5%. So if we use a 100,000 example, you would need to have £5,000. However, if you bring more than that to the table, then you will get better rates and better terms as you go down the 5% increment. So if you've got a 10% deposit, the rates will drop 15%, 20%, until you get to about 40%. The only thing that you need to be aware of, particularly in Edinburgh, is that the mortgage is based on the purchase price or the valuation, whichever is the lower figure. So if you've got a house that's worth £100,000, but you actually paid £105,000 to get that house, you would actually need a deposit of £10,000 and not £5,000, because you would need the 5 against the 100,000 valuation, but also the 5 to bid over the valuation, which is not included in the mortgage deposit. So that's a really important thing in Edinburgh because of the competitive market. But it gets added on to the mortgage amount you've got, and the two combined, in essence, are consolidated together for the solicitor to then act on your behalf to actually purchase the property.
That's great. Thanks, David. And just on that note as well, we've got someone asking here, can two people combine their first-time buyer ISAs to buy a property together and be jointly named on the mortgage?
Yeah, that's absolutely fine. I mean, it's a joint mortgage, so it's based on joint circumstances, joint incomes, joint debt, and also joint savings, because they're going to be jointly and wholly responsible for the mortgage. So them combining their deposit is perfectly normal, and obviously it helps strengthen their case, the bigger deposit they have, which banks see as a lesser commitment to them.
That's perfect, thanks, David. And just on that note as well, what shared ownership or support schemes are available for first-time buyers?
So they all sort of cross over each other, so it's sometimes difficult to explain. There's not as many schemes at the moment because the First Home Fund scheme went very quickly and there was huge demand. The main common schemes at the moment are more for lower income people, which is like shared ownership and shared equity properties, which is like the LIFT scheme. What that allows you to do is, rather than own a full 100% of the property, you can own a percentage of the property instead, and the LIFT scheme will own the rest of the property, which is a smaller step on the property ladder, but it means that you often can buy a bigger and better house with your less income, and also you need less of a deposit. So those are the most common, shared ownership and shared equity. We hope the government comes up with new initiatives in the near future, like they did with the First Home Fund scheme, such as the popular demand, but there's nothing that we're fully aware of the details at the moment.
That's great. Thanks so much, David. And next question, we're back to you, Craig. For properties with offers over prices, how much extra should we offer? It's a good one.
Yeah. Right, well, it's probably the most common question we're asked every day, and you'd think on that basis I'd have a clear answer for you all. Unfortunately, no, it's crystal ball. It's really hard. I mean, 10% is the one that's bandied about a lot, and actually that isn't always true. There's a number of factors. It's probably the easiest way for me to explain it that I think buyers should look at. You know, beyond speaking to your solicitor, the local solicitor that's got the advice, and they tend to know what the market's doing, but the factors that you'd probably need to look at are market conditions. So at the moment it's a really hot market, we know that there's not a lot of properties on the market. I know Ash said that there's a lot more, but that's from last year when nothing was coming on. Generally speaking, the supply stock's low, so that means demand's high. Next one is area that you're looking at. Some areas are hot, some aren't. But understanding that's really important because they're not all going at 10% over. Some are going at higher than 10%, some aren't even moving at all. So get to know the local area and what the conditions are. House types, big factor. You know, family homes have traditionally gone for a lot more. Traditional sort of conversions in affluent areas, that the retirement, sort of the grey dollar, shall we say, that they go for, 2 and 3 bedrooms. That goes for a lot because they've got big, you know, they've got a lot of cash to spend. You can look at, you know, how long's a property been in the market. If it's not been on a long time and there's a lot of interest, anticipate that's going to go for a fairly hefty surplus beyond the home report. If it's stuck around for a while and there's not been lots of interest, you're not having to pay the same. So these are the sort of factors you've got to look at, and then yeah, I would say looking at that, getting knowledge from your solicitor is going to help you frame what you need to pay. There's also useful sold prices on websites, ESPC, Rightmove, the like that can give you a guidance to what's gone before. But yeah, there's no shortage of advice that you can get from a local solicitor that can tell you what to pitch. So that's probably, if you look at those factors, speak to your solicitor, you shouldn't be too far wrong. The last thing I'm going to say on this, Ash, is be wary, because there is a marked difference. A solicitor can give you advice to win at closing date, and winning at closing date isn't always the best thing when you look back through the tunnel. Particularly in 2010, 11, we had a lot of clients that won at closing date before the market crashed. They paid a lot more, and then they felt particularly not stupid, but they felt actually we've overpaid for this. So when you're going to bid for a property, don't get too excited and don't think about what do I need to win. Be really clear about what you can afford and actually what makes sense for you. And the market can turn, so be wary of that. We try to give advice on that basis. It's not always about winning at closing date. That's the advice I would give.
Yeah, no, that's really good advice, because you don't want to kind of bid out with your means, and make sure that you're speaking to your solicitor to get that advice. That's great, Craig. Another one we've got here, just in the whole offer situation. How does the process of submitting an offer for a property work? Is it a lot of back and forth between the purchaser and the seller, or is it mainly a case of a yes or no question with no option to discuss?
Okay, well, again, it depends on the market. If it's a busy market like at the moment and things are going to closing date, you don't get an awful lot of opportunity to discuss with the seller. It's very much about making sure you've got your price, your date of entry, and those are the sort of main questions that you ask. What we'd always encourage clients to do, of course, is when you do view, is you do ask the seller the questions then that are important to you. Check out to make sure that things are working. If you're worried about them, make sure you look at the movables that you want to add in and you take a note of them, so that when the offer goes in, your best chance to capture everything is at the point of offer. If you offer and then go, oh, I'd like to add, it becomes more difficult to negotiate, and sellers might ask you to pay for that sofa that you wanted included, or that fridge freezer. So yeah, it really just depends on the market. And if it's a fast-moving market, there's not a lot of time to ask questions. So.
Thanks so much. And we've got another one. Someone is looking to purchase my first property in Edinburgh. That's exciting. And competition seems to be especially tough at the moment, with some properties selling for 10% above home report value or more. This presents a real challenge for many first-time buyers who are on a decent income but lack immediate cash reserves to bid extra on properties. Do you see the situation improving at all, or is it just to be expected that this will be the norm for purchasing property in key locations like Edinburgh?
Yeah, another crystal ball question. Listen, historically, Edinburgh's been very strong. I remember when I first bought 20 odd years ago and was in the same position, first time buyer, and I thought, I'm never getting on the property market ladder, saving up. So that hasn't changed. I know it feels like it's unique to you, first time buyers, but that's pretty much been the predicament for most people for the last 30, 40 years. I don't see that changing significantly, unfortunately. There will be times, like any market, commodity stocks, where there's buying opportunities and selling, but the upward growth is probably here to stay. There's nothing that I can see that's going to restrict that. So yeah, it's not good news in that sense. The good news is, if you do get on the market, you should see growth. And I think, generally speaking, it's a safe market to buy in Edinburgh. It's been it's one of the strongest in the UK, never mind Scotland. And all of the components are still here that will continue. So I think you've got a safe bet if you get on the Edinburgh market, as and when you do.
Good luck. I'm sure you'll get there. Something will come up. The next one is, what do banks need to know when part of your deposit is a financial gift from a family member? David?
So when it's a financial gift from a family member, the sort of key things that need to be done is, typically a letter needs to be signed by the giftee. So the parents, for example, the key messages on that gift is that it's a gift, it's non-refundable, and they don't need to repay it back. and they'll retain no interest in the property. Whoever's given the gift should seek legal advice, so they're aware of you know, what the implications are. Normally from a money laundering point of view as well, they need to satisfy sort of the build-up of those funds of 3 to 6 months. And from a mortgage point of view, sometimes the lenders like to see the actual gift then being transferred into the mortgage applicant's account, so they can see a trail of the funds. Very common thing nowadays, Bank of Mum and Dad helping because of the challenges to first-time buyers, but it is just them being aware that of the legal implications and the fact that a gift is a gift, basically.
That's brilliant. Thanks so much, David. We've got like quite a few questions that have just came in on the chats. Thanks so much to everyone for asking those. I'll just try and read through as many as we possibly can, and hopefully we can cover them all off for you. So one of the first ones we've got here is, my partner and I aren't married. How does that change the buying process?
Probably one for me, I think. Yeah, I mean, it's one of the advices that all solicitors have to give to any co-purchase, is make sure that you know if you're the same amount of gift or it's different, sorry, same amount of deposit, or if one party's putting in more and one's not. We would often advise clients to get a co-purchase agreement, which basically sets out what happens in the event that you come to sell or you split. So that's important, particularly if you are putting in different amounts and you're unmarried. You can also change the title. Not a lot of people know that, but you can change the shares in the title to a property. So you can buy, one person can have 75%, one person can have 25%. So that's very much a discussion between you and your partner when you work that out. It's not for your solicitor to resolve, but we'll implement whatever you tell us you want.
Thanks so much, Craig. We've got another one here that says, does the same apply if you want to buy in Edinburgh? Are you best to find a solicitor in Edinburgh? So yeah, I mean, Craig, I think you pretty much answered that one earlier, but yeah.
No, same advice. Get a local solicitor if it's important to you to get the best advice, what's happening in the local market. So. Yeah,
and someone else actually also asked along that same line, does ESBC have solicitors that we can use, or any recommendation list of them? Yes, we do. So Craig is actually one of our solicitors, so he would be more than happy to help you. If anyone wants to get in touch after this, we can definitely get you in touch with Craig, who'd be happy to help. We also have a list of our firms on our website as well under Find a Solicitor. But yeah, Craig would be more than happy to help you if you have any questions. So next one, is it possible for a full-time student to get on the property ladder? David, is that one for you?
Well, it'll depend on their income circumstances. So if they're not working, then no is the answer, because to get a mortgage is based on affordability, which is income to be able to pay off the mortgage. If they do have a permanent part-time job, for example, then yes, that income can be used for mortgage purposes. Obviously, the level of that income will dictate the level of the mortgage, which may not be sufficient in a property market like Edinburgh. But yes, to get some sort of level of finance, there needs to be, you need to pass an affordability test, which involves levels of income.
Perfect. And another mortgage question for you is, as a buyer, when you get a mortgage in principle, are you committing to taking the same mortgage if a purchase goes ahead?
That's a really good question. An agreement in principle is not you choosing a mortgage product. It's basically like a big overdraft facility to say that in principle you can borrow X amount. However, whoever you get the agreement in principle with, for example, Halifax, that does not necessarily mean you would go with them when you bought the house, because the market is constantly evolving and it's a bit like a football league table. Lenders are going up and down and changing rates all the time, and the time that is the important time to decide the best mortgage is once you've got an offer accepted, and a mortgage advisor would then revisit the marketplace to find the most suitable solution. So there's no products chosen until you've got a house to attach it to. It's more just a set of circumstances in principle that is acceptable to give you a certain amount of money. But agreement in principle is exactly what it says. It's just in principle.
And on that note, David, how early on in the process would you engage with a mortgage advisor? Should this be when you have the deposit built up, or could you have an initial conversation to find out what's possibly available to you?
It's never too soon to engage with a mortgage advisor. We typically like to speak to clients no later than a couple of months before they're looking to buy, so we can get accurate set of circumstances and give them an accurate picture of what their budget is and what life will look like when they buy the house before they buy the house. However, agreement in principles officially have a set period of time that before they expire, somewhere between 30 to 90 days. And in an ideal world, although it's not a gun to your head to say you have to buy during that time, you would want to try and make use of that agreement in principle within the 30 to 90 days. But these can be extended and these can be refreshed. But given the changes in the marketplace over the last 12 months, we wouldn't begin in the process 6 to 12 months before you would want to buy, because what advice today is and what it will be in 6 months could be something completely different.
Perfect. Thanks so much, David. Jess, so get in touch. David can help you out. He's an independent mortgage advisor. So if you have any questions for David, I'm sure he can help you out as well there. So we've got another couple to get through. We're almost there. Can you buy a house in partnership, like one person on a permanent contract and the other on a zero contract?
Yes, you can. The permanent contract is absolutely fine, ticks the boxes with all lenders. 0 hours contract, because that is more like temporary work. The lenders typically would want at least a 12-month track record. And what they would actually, a lot of lenders would do is they would actually take the average over the whole 12 months. So you maybe have to provide 12 months of payslips to show how much you earn during that time. Some lenders like it, some lenders don't. So it's just a matter of looking at that circumstances and finding a lender that will be comfortable with that and able to add that onto the permanent income as well.
Perfect, thanks so much. And one more we've got here is, when a property changes to fixed price, can the solicitor negotiate a lower price? Over to you, Craig.
Yes, short answer, of course they can. They can do that. The one caveat I would say to that is, if it goes to fixed price and you try and negotiate a lower price, if somebody else comes in at the fixed price while you're negotiating, you're going to lose the property. But yeah, absolutely, you can negotiate down from a fixed price.
Amazing. And there's one last question, and it's for me. I get a question. Someone's just asked how you kind of keep up to speed with everything that's happening in the market, and you know how you actually just keep on top of new properties coming in. So what I'd suggest is going on to register my ESPC, so you can actually set up for alerts for new properties coming onto the market. So that would definitely be one of the first steps. We've got a monthly house price report that comes out as well. Definitely, as Craig has mentioned, speak to your solicitor, get in touch, and you know it's never too early to get in touch with either mortgagees or your solicitor as well. And also, we have properties that come onto our website 72 hours before they go into other portals, so they're exclusive properties. So do keep an eye out for them as well. And I think we have. Do we have time for one more? Yeah, Leanne's like, yeah. So from the time from your offer is accepted, how long does it take to do all the paperwork and get the keys? Craig, one for you.
Generally speaking, we'd say 6 to 8 weeks from that. And that there's a few drivers for that. One is your mortgage offer of loan. When that comes through, it can be very quick. Some lenders will take a bit longer. So generally about 6 to 8 weeks, we would normally advise. The legal work, again, usually fits within that. So that's probably a good average. If you say something like 2 months, that should be comfortable for a date of entry. That's what I'd advise.
Perfect. And I think that's us answered all the questions. We've got through it. So yeah, I just want to say a massive thank you to everyone for coming along today. Thank you so much to our panelists and for Leanne for hosting too. And yeah, if anyone's got any questions, Leanne, we can just email into marketing@espc.com. And if you are looking for mortgage advice or a solicitor, Craig from McDougall McQueen or David from ESPC Mortgages would be more than happy to have a chat with you. And we always try and do these events, don't we? First time buyer events. So there's a few more cropping up. And yeah, just get in touch if you have any more questions. Leanne, do you want to add?
I think you've covered everything perfectly.
Okay, guys, well, thank you so much for joining us, and thank you so much for all the questions. Hopefully that's been helpful, and we'll speak to you super soon.
Thanks all.
Thanks, guys.